Let's review key points. Bitcoin fell below $100,000, causing $1.3 billion in liquidations and a liquidity halt, putting short-term pressure on the market. Can Bitcoin's price stay stable? $100,000 is a crucial level. Meanwhile, Korean retail investors are leaving the stock market for crypto trading, but who will be left holding these altcoins? October 5th, Wednesday, this is BTV Chinese channel. Where is BChain? I'm Michael. Now let's look at the top crypto headlines from the past 24 hours, brought to you by NEXO. NEXO is a compliant exchange from Australia, and it has now officially entered the Asian market. Scan the QR code on the screen to download NEXO. After the sponsorship period ends, we will hold a lottery together with NEXO. As long as you download the app using our QR code, you'll have a chance to win Ethereum, Bitcoin, and other prizes. Plus, you'll enjoy a permanent discount on your trading fees. As the channel level or the discount rate increases, your benefits and discounts will also continue to improve. So download NEXO and, within a compliant framework, let your assets be borrowed, spent, or used as collateral, enabling efficient and sustained growth. All right, let's look at the most important headline data. The US government shutdown drama has now reached its 35th day, making it the longest-running series in history. Arthur Hayes, the founder of BitMEX, put it clearly. He said the Treasury's current state is borrowing money but not spending it. There's $150 billion more cash sitting in the TGA account than the target, all blocked at the door and not entering the market. So what's the result? It's like the market has had its IV drip pulled out. Even Bitcoin is struggling to breathe. On top of that, the US has to issue $2 trillion in new debt every year, plus some hidden quantitative easing through short-term repo mechanisms. This isn't just old news, this is clearly the market going through a full cleanse and detox. That's why you saw Bitcoin briefly pierce the $100,000 mark before dropping. Fortunately, China announced a pause on some tariffs on US goods, which helped put a stop to the bleeding in this downturn. So in the short term, it looks like the Treasury's act of tightening the money tap is going to continue for a while. I think when the US government reopens and the money starts flowing again, that will be the starting point for a rebound. So, when the US government is back at work and the crypto market bounces, short-term traders are really under a lot of pressure right now. In just 24 hours, 30,300 Bitcoins were sold at a loss and dumped onto exchanges. Isn't this what you'd call a wave of panic selling? For short-term holders, their spent output profit ratio indicator, the SOPR is stuck right around 1, it can't go up and it can't go down. The meaning is simple, the market is still struggling. If people are making money, it's not much, and if they're losing, they can't bring themselves to sell. What's even more awkward is, what's the current take profit line? It's $12,500. It's almost like a programmed reflex. Whenever the price hits this level, selling pressure kicks in. So right now, the market is basically a collective anxiety reflex for short-term traders. As soon as there's a profit, people cash out. When there's a rebound, they sell. It's like everyone's afraid of missing the last chance to escape. There have been several rebounds, but none have broken through the key levels. In fact, market confidence still hasn't recovered, and this recent drop has only scattered the chips even further. To truly break out of this period of volatility, we need to wait until this wave of panic selling has been completely washed out. Only then can the market move forward with a lighter load. Let's take a look at Ethereum. Don't be fooled by how things look now. The US Ethereum market is as cold as an ice cellar. On October 31st, Coinbase's premium index for Ethereum dropped straight to negative 0.057, marking the lowest point for the Ethereum index in the past 4 months. Even the price on Binance is now higher than on Coinbase. What does that mean? It means Americans have started dumping. Back on May 9th, when Ethereum surged from $3,800 all the way to $4,500, Coinbase still had a positive premium. Institutions and retail investors were all scrambling to buy. But now the trend has reversed and it's heading straight down. Sounds pretty scary, right? But seasoned crypto veterans all know that this is the classic playbook favored by US capital. First, they create panic by dumping, then they buy back at the bottom. A retrial isn't a death sentence, it's more like taking a deep breath before the storm. As soon as there's a hint of easing in the macro environment and liquidity returns, those people who are now shouting that it's all over might just end up being the ones who buy the dip and find it incredibly rewarding. The very same people. All right, please give us a like. We'll help you sort through the latest updates from the crypto, blockchain, and mining worlds over the past 24 hours. You're also welcome to become a member. This month marks our channel's 6th anniversary. If you join as a YouTube Gold member this month, you'll not only receive a USDT reward, but we'll also send you our channel's book and a t-shirt. Now let's look at the news. Currently, the US government shutdown has lasted 35 days, tying the previous record for strikes, and global markets are on edge. The first to buckle was Bitcoin, which has already plunged below $100,000. Do you know how much was liquidated in the past 2 days? $1.3 billion. So traders are panicking, wondering if this is really the swan song of the bull market. But in my view, this isn't the end. It's just the inertia of the 4-year halving cycle. So what should we do now? Go with the flow. If it keeps dropping for a few more days, and if the monthly chart really forms a death cross, then maybe I'll change my tune and say the bear market has arrived.
From October to November, long-term holders sold more than 400,000 bitcoins over 30 consecutive days, which is about $40 billion. This has brought tremendous selling pressure to the market. At the same time, short-term holders have also started to waver, transferring about 26,800 bitcoins, roughly $3 billion, into exchanges while in a loss position, further intensifying the selling pressure.
I think the reason I shake my head at Bitcoin is because it tries to be everything to everyone. Listening. Everything you would want for Bitcoin is happening right now. That is, the government is providing support, the financial guardrails are shifting, and we're getting news every single day about these guardrails becoming more aligned with the digital economy. Things that are necessary for network effects to take hold. All of that has happened. We're still seeing inflows from retail investors, and now even the banks are opening up access for people to participate.
Cointelegraph points out that Bitcoin has already fallen below the weekly descending wedge, with the next levels of support being the 50-week mark at $103,300 and the psychological level of $100,000, as well as the 100-week SMA at $82,000. If these key levels cannot hold, the target may drop further to $72,000.
I want to ask everyone, if a real bear market comes, what will you do? Will you reduce your positions? Wouldn't that just be chasing the highs and selling at the lows? So it's still too early to draw any conclusions based on the current situation. Right now, it's like we're heading into the next large-scale psychological test. On one side are the short-term traders whose hearts race as they watch the 5-minute candlesticks, and on the other are the long-term holders who only check the price every few weeks or months while keeping their coins in cold wallets. They're not looking at the same candlestick, but they're all part of the same drama. What really determines the market trend is whose emotions break down first. Some people can't handle the volatility and end up selling at the lowest point. You have to understand, the old tradition with Bitcoin is that after completing a 4-year cycle, you look back in the 5th year and realize, oh, so that period was the bull market and that price point was the peak. So instead of obsessing over whether this is the final chapter, it's better to first figure out one thing. How much capital do you still have on hand? And is it enough for you to keep buying the dip in the next round of declines? In this world, it's not about who can make the most money in the short term, but about who can survive safely until the very end. Let me tell you an even more sobering fact. The kimchi premium in Korea is no longer a premium. Why? Because Koreans are said to be the most enthusiastic crypto traders in the world, with more people trading crypto than stocks, right? When it comes to FOMO, Koreans dare to claim second place, and I don't think anyone would dare claim first. So how was the kimchi premium created in the first place? The price of crypto in Korea used to be about 10% higher than elsewhere, almost like people were paying a premium for their beliefs. But now, what I want to tell you is that the Korean market has cooled down a bit. The KRW trading pairs are as cold as a freezer compared to the global crypto market's heat. They're no longer being intercepted by Korea. Now, when Korean retail investors chat in their Kakao groups, the topic has changed to which semiconductor stock can double today. They've switched to AI, to chips, to Nvidia, so even Koreans aren't speculating on crypto anymore. It's probably going to cool down for good.
In November, average daily trading on Korea's largest exchange fell by $1.78 billion, compared to $9 billion in December 2024. That's an 80% drop, marking 4 straight months of decline. The second largest exchange also suffered, with volume dropping from $245 billion to $890 million. That's a drop of about 69%. At the same time, Google Trends data in Korea shows that the search popularity index for Bitcoin is only 44, a 66% crash from last year's peak of 100, indicating waning retail interest. It's clear the tide is receding.
In Korea, aside from the crypto market, which is strictly regulated so that only KRW trading pairs are allowed, with KRW in and KRW out, the rest of the financial markets are still free and open for circulation. So, Koreans have a particularly wide range of investment options to choose from. When stocks go up, they buy stocks. When crypto rises, they buy crypto. You have to understand, retail investors are the same everywhere in the world. They all have the same mentality, chasing gains and selling in panic. So right now, with stocks performing well, people are trading stocks. But once the crypto market heats up again, when the Federal Reserve gets back to work, you'll see the kimchi premium return for sure. are legends of getting rich overnight here. And there are also carefully crafted scams. This is a dark forest of chaotic development, but it also nurtures the spark of hope that leads to the light. The destination of faith is freedom, and the endpoint of consensus is equality. Let me guide you through the fog to see the future, and together, let's gradually become wealthy. Institutions are frantically hoarding 4.7 million Ethereum, which they've already secured. So why is 10 Research taking a contrarian stance at this moment? After 5 years and 11 audits and 6 times being hacked for cash, can balancers survive this latest deficit and be reborn? All right, in this bull market, we can't just focus on the Bitcoin institutions. In fact, aside from Bitcoin, there are 15 companies worldwide that are aggressively hoarding Ethereum, with a total amount reaching 4.7 million coins. One of these companies alone has amassed 3.3 million coins, making it the undisputed king of Ethereum treasuries. Shoplink Bit Digital is also not to be outdone. Chairman Tom Lee, whom we just reported on last week, said this. He said that Ethereum will hit $10,000 before the end of the year, right? But now, the chairman of 10 Research has poured cold water on that idea, saying it's way too early to be dreaming about that.
We're seeing more and more people selling their other altcoins and just buying into BTC because this is sort of like the clearest asset.
The report points out that Bitcoin continues to draw in institutional funds, causing companies focused on Ethereum to face a liquidity crunch. Ethereum is becoming the main short target for investors hedging digital asset risks. Previously, the popular Ethereum digital asset custody model failed due to insufficient transparency in private investment PIP. From a technical perspective, if ETH falls below the $3,000 support level, it could further drop to $2,700. Researchers warn that the weekly stochastic indicator is showing a top pattern, and there is a risk of a false breakout in the long-term new trend. This is highly similar to the price movement in March 2025.
Actually, I think 10 Research's bearish logic does have some credibility. On November 10th, the entire crypto market crashed suddenly, with $19 billion in liquidations reported, and since then, the market has just kept weakening. On top of that, the US spot ETF hasn't been performing well, so institutions have all collectively turned conservative. As for Ethereum, it does have its strengths like staking and staking rewards, and also layer 2 solutions. But the problem is, there isn't much money left in Ethereum's treasury, and new players aren't coming in, so this sweet story probably won't last much longer. In contrast, what about Bitcoin? Institutions are becoming more and more confident in it. It's become the darling of safe haven assets. Right now, all the smart money in the crypto world is doing one thing, shorting Ethereum to hedge against Bitcoin's risks. So at least for now, we can't afford to fantasize. You could make money buying almost anything. If you want to hold altcoins, holding Ethereum is much safer than holding random altcoins. All right, let's take a look. In the world of DeFi, who is the one that's always getting hurt? Not many people are very familiar with the Balancer project, but it really is a die-hard warrior in the DeFi space. In 5 years, it's been audited 11 times, and yet it's been hacked 6 times. You have to say, this guy's had a tough life, but it just keeps going. In 2020, right after launching, they lost $520,000. All of 2021 was spent patching holes. Then came the Euler incident, costing another $10 million. A precision bug led to a $2.1 million theft, and when their DNS was hijacked, they lost $240,000 more. In 2024, Volocor dragged them down, losing $6.8 million. Just as they caught a breath in the past days, they were hit again, $160 million gone instantly. They really are the workhorse of the hacking world.
This attack could be called a professional-level operation. The hacker exploited an accounting vulnerability in Balancer 2's composable stable pool, using forged fee deposits and manipulating pool prices to transfer a large amount of assets like OSETH, WETH, and WSTETH in a very short time. They then laundered the funds using Tornado Cash.
Balancer, and what excites me the most is its flexibility. You can now create a pool with any number of tokens, up to 8, though that's more of a technical limitation.
They urgently suspended all pools, offered a 20% bounty for asset recovery, and warned that they would track down the hacker's IP. The root cause of the vulnerability lay in flaws in batch swap price calculation and permission management, which triggered a major upheaval across the board. BTC and ETH dropped by 2.6% and 5.6% respectively, while SOL plunged nearly 10%. BL plummeted 12.6%, and related stablecoins also saw capital outflows and depegging.
Balancer is probably the unluckiest DeFi project out there. Do you remember the game project called Balance that we once recommended? Half a year has passed and the project team had promised a buyback if users were dissatisfied. But what about the promises made to the nodes? They still haven't been fulfilled. At the very least, we've been communicating with the project team since August, but we've received very few responses. It feels a bit like a soft rug pull, but there's no need to panic. At the very least, we can return the commissions our channel received back to everyone since the data is in your hands. We need to know which users are eligible for the refund. Of course, we've even dared to stand up to the Chinese police, so if we really need to take a stand with everyone, we hope you'll join us in reclaiming the rights that belong to us. We don't look for trouble, but we're definitely not afraid of it. Stay tuned to Mashi for the latest updates.
FTX founder SBF is appealing again. His lawyers pleaded in a New York court, claiming the entire fraud trial was unfair and demanding the conviction be overturned. Crypto community netizens joked that the trial isn't over yet. This drama is even longer than the FTX liquidation. Canaan Technology is trending again with 3 major backers, Brevin, Galaxy, and Voice, throwing in $72 million to bet on it. While the mining industry is still in a cold winter, capital has already started to heat up in advance. The betting markets on Holy Market are practically laughing. The odds of the US government shutdown ending between October 4th and 7th are only 20%. The meaning is clear. The market thinks those folks in Washington will keep arguing for quite a while. The Korean stock market has also hit the brakes. The Kospi 200 futures dropped more than 5%. And the exchange immediately hit the circuit breaker, forcing algorithmic trading to cool off for 5 minutes. It seems even the machines need to take a breather. The market is almost certain that the Fed will make a move in December. Data shows there's a 69% chance of a 25 basis point rate cut and only a 31% chance of no change. All of Wall Street is waiting for Powell to give the nod.
It's good to be a decent person. Kindness is the baseline, but being soft-hearted just won't do. Sometimes, when you keep giving in and backing down, you're actually enabling bad behavior. You have to realize that blind tolerance just drains your kindness. Some people simply don't deserve your forgiveness because they never intended to change in the first place. When you say it's okay, what he hears is, I can hurt you again. A second chance is never about redemption. It's the knife that tests the limits of your boundaries. So don't waste your kindness on a wolf that can never be tamed. Remember, it's important to be kind, but it's even more important to have an edge. Not causing trouble shows your upbringing. Not fearing trouble shows your confidence. The next time you encounter someone bad, smile and say, this time it's not your turn. All right, that's all for today's program. Every day we help you sort through Web3 news, and here we have curated member benefits for you. It's our 6th anniversary this January, so if you join as a gold member this month, there are plenty of perks: cash, commemorative merchandise, and even my book. We hope to ride this bull market together with everyone, gradually becoming wealthier. See you tomorrow.